All right, so recording started. Today is March 12th, so this is the Friday Q&A live stream. I'm going to start with the first question by TNA, which is, could you please discuss the overall market conditions and how alts have reacted to Bitcoin pushing towards all-time high? Thanks. That's a good question, and I think that's always going to be a little relevant. I'm going to go ahead and, this was a squiggly from last night. So, all right, let's talk about the first part of your question, which is just the overall market conditions. So the overall market conditions, I wouldn't say it's overly bearish by any means, not yet at least, but I wouldn't say it's bullish either. I would say we're somewhat neutral. We're still kind of just trading in this range, right? Which is this range high right here, right? The high set at 58.5 and the low, which is around like 43,000, give or take, right? Depending on what exchange you're trading on, the numbers could be a little different, but I'm going to be using the Binance perps. Okay, so we're still in this range. Mid-range is right here, right, which is around 52.8 roughly. I have that marked out. It's not exactly the 50%. I don't do it the same way a lot of other traders do it, because I think there has to be context to the number, right? Just because it's the 50% line doesn't make it, like the support or the resistance per se. It has to make sense with what the market is trying to show you. So let me give you an example of what I'm talking about. So on this chart, we'll do the fib retracement, right? So, right, just top to bottom. You see how the 50% actually lines up like at 51K, give or take. I guess, if you're trading the EQ, yeah, I guess this would be the proper textbook way of doing it. I like finding the area closest to the 50% area that makes sense to act as support or resistance. So for me, the 50 EQ, technically, yes, it's right here, but I just find the nearest support and resistance and target it as that. I don't believe that there's a magic number that always acts as support and resistance. I think of it more of like a guide, right? So in this case, we're not super bullish, but we're not super bearish either. I think people who are very overexposed will see this and be like, wow, dude, we are dumping, we're dying, I've lost hundreds of thousands and millions of dollars, whatever. But not that bad, to be honest with you. You'll see here, these were the highs. We didn't really sweep it. So technically speaking, this is a lower high. So this is a lower high forming, right? On I guess on like a higher time frame. So this would be the high, this would be a lower high, okay? This would be the lows that we've set. So if anything, there's a good chance that we might, trickle down here or something like that. Ideally, if we're super bullish and we're gonna break up, you want to see price just kind of condense right here and push up, which was kind of the squiggly that we had earlier right here. But yeah, you don't really want to lose this wick, this 55K, and you really don't want to lose the 54. So these are two key swing areas that I'm looking at right here. So if you want to mark it on your charts, it's going to be this one and this one, right? So these are the two key areas of liquidity, right? Because we hunted the liquidity down here and then we pumped, right? Same thing here, pumped, albeit this one got rejected. So sellers are really stepping in here for whatever reason. That just basically means the market isn't really ready for new all-time highs, right? So a little bit more chop and consolidation is necessary. And if this doesn't cut it, then we're probably going to go a lot lower, down to the 52, 53 area. But again, play it level to level. These are the two areas I'd really look for. So if there's ever like a wick that like trades down here, I would look to knife catch in here, right? And then right here is where like you build a position. Knife catching is not building a position. Okay, there's a big difference between the two. Knife catching, you're basically praying that you caught the bottom. You're not really building a position, right? You're not like, all right, I'm gonna enter like 20% here, and then if it drops another 10%, I'm gonna buy it here. That's building a position. Knife catching is just you're literally praying that you caught the knife and it's not going to keep falling any lower, because if it falls any lower, you get cut, right? So yeah, state of the market, not too bearish, not too bullish, but I do think that you're going to want to buy dips if it goes anywhere between here or down here. Okay, so two key areas I'm looking at. If it goes down here, then we start getting a little bit more bearish, right? But until then, it doesn't really make sense to fall into like the I guess the popular opinion that, you know, look, we're gonna dump down NFTs and everything, laser eyes are the top. Don't know about that. And your second part of the question is, how have alts reacted to BTC? Alts tend to do this thing where they're basically higher beta plays of Bitcoin, which basically means they capture more upside, but they tend to also capture more downside. So when you see things like this, right, where the market looks a little toppy, people exit their alts first, right? Why? Because people understand that, all right, alts went up a lot, I'm going to secure my profits, and or they know that it's going to go down a lot if BTC dumps. So there's always like a first mover effect from alts. Like when Bitcoin's about to dump, people get the fuck out of their alts, right? So you're going to see alts kind of just retrace a little bit. Like even Matic, who's super strong, you'll see that printing like a bearish retest on the 4 hour, right? So let me tell you what I'm talking about. Okay, so breakdown, right? Retest, swept the highs, about to close below. So there's a good chance that we probably go down to like 630 or something at some point. But yeah, so and this is with the BTC pair. So basically BTC, if it goes down, Matic is going to go down more. Matic has been one of the top performing coins of the last couple of days. So I would anticipate the weaker coins to look worse than this. Okay. All right. Hopefully that answers your question, TNA. Next one is from Koala, who asked, would love to know your thoughts on distribution and reaccumulation. So I'm assuming that you're talking about Bitcoin, okay? Okay. So when you're looking at reaccumulation, the things that you want to look for, let me see. First, you want to look for volume, okay? Because volume does make a big difference, but more or less, you're looking for what I like to call a base. There might be other definitions for it, whatever, but the way I learned it, it was basically when price, you see how there's this violent dump down here. So you kind of see like in this, how many days is this? Let me see. 2 days or so, like roughly 2 days. So in these 2 days, there's like 3 green candles or white candles in this case, but there's like 3 4-hour white candles, okay? And it's just dump after dump after dump. Every push up is sold into. Even the white candles where like you see this push up, it gets sold right into. When you see something like that, right, you naturally get pretty scared, right? And then you're probably wondering from here, like, all right, like I wonder what happens here. You want to step back from the market and watch to see what's happening. Is it distribution? Is it reaccumulation? Reaccumulation tends to have areas where buyers step back in, because that kind of tells you like, okay, look, buyers are interested here. If buyers are interested here, they're accumulating just by definition, right? Because if you're buying, you're accumulating, whatever. Okay, so you're looking for this. Okay, so if you're using this low, right, say at the time you only have this information, obviously we have a little bit more info over here, but you have this low and you see price trade below these lows a couple more times, but buyers step in, right? You see how literally the next push down, we go just below it but close right above it. See, and then we push back below again, instantly start trading back above it. That just tells me that this looks more or less like reaccumulation, right? Because buyers are willing to step in here. So the market has basically determined that, hey, the fair value of Bitcoin is 44k, 43k, whatever, somewhere between those areas, right? And people are reaccumulating in this area. Obviously, that has to be vouched by high buy volume spikes or low volume sells. Okay, you can use CVD, which is like an indicator for it, but yes. And then you want to see price level out like this, because what this tells you, what this base tells you, is that sellers tried to push price down multiple times but couldn't, right? Price kept going back above 45k, right? Which tells me that, hey, we're in agreement between, you know, buyers and sellers that price of Bitcoin is worth 45k. Like, we're not going to sell it any lower, or we're not going to get to buy any lower, which is why I put this front ran. Like, there's a good chance that this little support area that everybody wanted, which is like the 42k area, got front ran, because people are like, nah, you know, I think the fair price of Bitcoin is 45k. And then for distribution, you just want to see the opposite of that, right? Which is, instead of the lows getting bought up, it's the highs getting sold into. So there's a good chance that this could be a micro reaccumulation on a macro distribution, right? That's something that we just don't have enough info to kind of, you know, agree on just yet. My take is that it's probably not distribution, just because you normally tend to see wider spikes up. Okay, it doesn't seem like there are big positions unloading. The wicks don't support that either. So this to me just looks like more accumulation and consolidation above the highs. So yeah. Next question is from BriptoQ. Can you provide an update on your current Ethereum long? So for the people who are watching this recorded, he's talking about the Ethereum that's in the Binance futures trading setup. So I'm going to go ahead and jump over to that. So right now we are sitting at support, right? It doesn't look too bad, to be honest with you. These are the kind of areas where most people tend to fold, right? Where they kind of just, all right, this looks like shit, you know, it's folding right here, I gotta get out. It's gonna dump all the way down here or something, and it could, but in the long run, you never want to sell this area, right? You never want to sell this area. Not because it's a like it's a terrible iffy spot to sell, but just because you haven't seen a decision yet. You're basically selling assuming that it's gonna break down, and it could, but you don't want to assume it the same way you don't want to assume a break up. So right now the setup is still pretty neutral, really. Nothing too crazy right here. I would anticipate this to provide a balance at least, which, you know, should give us a way out if we wanted to exit. Ethereum BTC would be a good measure of that. Oops, did I hit it? Oh, I did. Cool. All right, so Ethereum BTC, let's take a look on the higher time frames. Kind of just sitting on support, right? Some people see this, you know, the head and shoulders, right? Shoulder, head, shoulder, right? This is cool. I do like that, you know, people are getting more, I guess, or becoming less gullible to the head and shoulders patterns, because it has to be put into context, right? So in context, you're on the neckline. This isn't where you sell. Like, the way you play a head and shoulders, and just invert this for the inverse head and shoulders, obviously, but the way you play it is you want to actually be selling like this area, right? Like these areas. You don't sell at the neckline, or you buy at the neckline if you're long, but you don't really want to sell the neckline. Okay, the neckline, okay, as bad as it sounds, is support, and it's how people get trapped the most. Okay, don't do that. that will put you significantly farther ahead than other people, because a lot of people, they see this setup on, say, like whatever book they're reading or whatever website they're on, and they're like, oh, this is a bearish pattern. And it is, but there's a way to play bearish patterns, right? And it's definitely not by just assuming that this is going to break down, because sometimes it doesn't, right? Because sometimes it doesn't do this. Like sometimes it does this, right? Where it's like, it just kind of wicks down a little bit. You get your hopes up, you short big because it's the most obvious head and shoulders pattern ever, and then it takes your liquidity and pumps up, and that's painful. That's really painful. So again, not too bearish on this either, even though it is a, textbook head and shoulders setup. If we break down below, retest here, it provides a better short setup. But again, I'm just not really interested in shorting too much. In a bull market, you're gonna make the majority of your money longing, right? And you're gonna lose the most of your money shorting. Like it's how that, I guess, inverse correlation works, where the potential to make a lot of money is in longing. When the entire market is going up, 50%, 100%, 300% over the course of a few weeks or months, the money is made longing. But if you're short, the money is lost shorting, right? So I just don't like shorting unless they're scalps, unless it's like, all right, this is a very obvious short setup, like this bearish retest or something right here, right? Where break down below, fat candle, retest up, doesn't even close above this area, slowly just dies down. This would be a clean short. But other than that, I don't know. You can even extend it down to like right over here, and then buy the retest of this. But yeah. Next question is from Mark Liu. Hey Loma, I hear you mention a lot of liquidity concepts like running highs or something. Market's not ready for new highs. Would you be able to go over some basic ideas and maybe how I could learn more about this? Thank you. Yeah, I can give you a quick primer on why that works the way it does. So let me, you know what? We'll stick to this. We'll stick to this chart. I'm gonna remove all the drawings so it's cleaner. I don't mind redoing this later, so it doesn't matter. But all right. So on this chart, sorry, I was drinking water. You're gonna see. Actually, let's start with this. I'm gonna tell you guys like some basics about almost like market theory, right? Where say you're trading with, I don't know, $5 billion or something, right? Some obscene amount of money, $50 million, whatever. Okay, say you need a $50 million position. The way that you can engineer liquidity, okay, is by running highs and lows, right? So look, say you only had this information. You only had up to this information right here. Okay, so this has already set the highs, right? This has set the highs. And then this was your expansion candle right here, right? This was basically where it went ballistic, right? Where you had like a little indecision right here, and then just boom, 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 right? Just up. So when you're looking at this, where do you think stop losses are for you to generate liquidity, right? For you to get filled at a very high number, it's almost like mandatory for you to find sellers or buyers, right? Which means, for example, so say you bought here, where would your stop losses be, right? It would be somewhere maybe right here, right? And you notice that price kind of just wicks down below here and then runs to the highs. And if say you shorted this area, where would your stop losses be? Probably somewhere up here, right? Kind of just logical areas where price naturally moves to see where it can take liquidity. That's where the phrasing comes, like the market is a curious bitch or whatever, right? The market is naturally curious because it is. It wants to figure out, hey, what's under these key areas, right? What's under, or what's over this. And that's why people have phrases that, get kind of I guess they're renamed all the time. They're called like running the highs, sweeping the highs, or liquidity hunts, or whatever you want to call it. It's kind of based off that idea, right? So the way that you would find things like that is just by, is the stream capped off at 50 people? Let me see if I can change that. I don't think I can change that. Okay, I'm sorry guys. It's capped off at 50, but I do have it recorded, so we will hopefully get the replay on that. But hopefully this kind of like shows you what I'm talking about, where it's like above and below key areas are where people put their stop losses, right? And that's the proper way of doing it, but the market is efficient, right? It's not just going to be like, okay, well, you put your stop losses there and I guess I will just never run it, because how else are you going to get filled? Because for you to get filled, somebody has to sell or somebody has to buy, right? Depending on what side of the position that you take. And when you get liquidated or when your stop gets hit, you're forced to buy or forced to sell, which means you're forced to take these shitty entries, right? How many times have you been stopped out and you're part of this wick? Probably a lot. And it's not just because you're bad luck or you're a shitty trader. It has a lot more to do with the fact that, well, look, there's a better trader out there with more money than you that would appreciate it if you had these shitty entries so that he could make money off of you. In that sense, you'll start to realize it's a zero-sum game. And when you think about it like that, you start seeing like, this is how the game is played at the higher levels. Like you're not just gonna buy 50 million leverage positions like out of nowhere because you're just gonna pump price up. You need events like this so that you get a good entry, because there's no way that you get a good entry like just buying casually unless you're on a long enough time frame where you can average in slowly over time. So hopefully that makes sense. There is a screen share, Devilish. I just realized that it's full at 50. I did not know that. That's a new thing. Maybe I'll have to make a Twitch next time, and then we can all hop onto Twitch, and it'll be like a private Twitch or something. So we'll figure something out with that. I didn't know it capped off at 50. Next question by Garzamon. So Garzamon asks, any alt watch list to buy possible dip if you are interested in? Not really many alts I'm interested in, to be honest with you. I'm interested in things with narratives. I think during a bull market, your best bet is to have something that's fundamentally backed. Why is that? Because when you're trading technicals, you're trading levels to more levels, right? You're looking at the daily, the weekly, the monthly, whatever time frame you're looking at. Cool. But when you're looking at fundamentals, it allows you to have this conviction that, that you'll hold on to a trade, even if it's up 200%, even if it's up 300%. And in a bull market, that tends to pay off because things with good fundamentals, obviously do your own research, but things with good fundamentals that do play out in a bull market tend to do extreme numbers that technical analysis could never fathom, right? Like, for example, Lend or AAVE, AAVE. I don't think there's any technical analysis that could have predicted that AAVE would do like a 10,000x run from the bottom, right? I don't think there was any analysis that could have shown that, DeFi was going to be the next big thing where everything was just going hundreds of multiples, but fundamentals did. And so that's why if you're trading alts, I recommend just focusing on things with narratives, which right now would be layer 2s, right? NFTs, DeFi. So those things are what I would recommend sitting on. So Ethereum scaling options like Matic, the new Coinbase listings like Scale, SKL. Apparently Chili's is a really good fundamentally backed thing too. Just a lot of things with a narrative around them, right? Like, how when CZ was like, yo, I'm gonna have an announcement of an announcement, and then you saw BNB just pick up price, and not only pick up price, but even when the market dumped, it didn't dump, right? So that's why in a bull market it pays to have your technicals and your fundamentals aligned. So keep that in mind if you're looking for stuff. I know I just tossed out a couple coins that I'm looking at, but I'm not looking at too much. And to be honest with you, in a bull market, you should not be looking at too many. You should be looking at a couple, like maybe a handful, 5, 6, 7, whatever, and then really focusing on those, because realistically, you don't need to catch every single pump. Like, you really don't. Say you caught Doge into BNB into DOT, which all pumped at different times, you'd be well over like 100x, right? And that's all on Binance. Let's say you didn't even get into like Matic or Aave or Sushi or Uni or any of those other coins. You would have done multiples, and they're all available on margin. So if you even low leveraged, like 2x, 3x, right, where your liquidation is near impossible unless you're just like completely away from the computer, no stop loss, whatever, you're doing 200, 300, 400x just by holding, right? So it pays to just be focused on a couple coins, a couple sectors that are fundamentally backed. So this is from Miner49er, nice name. Do you use any statistics like footprints, order book analysis, open interest levels, PTO, etc.? Occasionally I'll check open interest. I will link a book with an excerpt of open interest that I want everybody to read if they're interested. If you don't know what open interest is, probably read it just so that you know. You don't have to use it, but trading is a lot of what you know, okay? So yeah, sometimes I'll use order book analysis, but even then, very iffy on that because it's very easy to manipulate. Like, I can go ahead and put up like a 2 million buy wall on Matic, but it's not really there. If somebody try to sell into it, I'm gonna exit out of it. So things like that. Footprints, interesting. I don't really like using footprints too much just because I can't apply it to my trading strategy, but I know people who do use it well. But yeah, so that's pretty much all I use. Get some water. This one's from Lahane. Hey Loma, what kind of scalping technique do you use, and can we learn it in the near future on live trading? So, one thing that I will say, oh wow, this is a really good setup. Who did this? It must be me. Okay, let's go to a chart that I haven't marked up. God, I'm marking up every goddamn chart. Okay, let's remove that. Okay, so when it comes to scalping, there's something that I can give you in a sense where, like, I can tell you what to do and I can tell you what I'm looking at, but truth is, scalping is something that you pretty much have to develop on your own, just because it's one of those things where it's in the moment, right? It's a very fast pace and it's a very, very reflexive. It's not the same every time, so I don't want to give you a hard rule on what to do, what not to do, because every day the market conditions differ, and as a result, like, your trading strategies need to change, the amount that you risk change, and but as far as scalping goes, what really helps is just figuring out, like, what the market is doing, right? So I never suggest people to start scalping full size right away. Like when I start with my day, I go with like a very small position just to get a feel for what's comfortable, right? As in, all right, I'm gonna take a short because, you know, maybe this setup is a short for me. Is it going my way, or does it seem like every time it dumps, there's a like infinite bids pushing it up, right? And you'll be able to feel that. Like I promise you, you put some money on the line, not too much, maybe like, you know, $5, $10, whatever you're comfy with, right? And you'll feel like, oh shit, this is not very comfy, you know, like it is not doing its job. And that might take you 30-40 minutes to really get the hang of, but yeah, that's a tip that I think would apply regardless of market conditions. But there is no end all be all way of doing it. And also the thing about all of this is that I can only give you the fundamentals, like the basic foundations of trading, but a lot of you guys are going to pretty much form your own way of trading. You're gonna see things differently, you're gonna, you know, take different kinds of trades, you're gonna risk differently. So a lot of the things that I do share tend to be more mental specific, and really just foundational stuff, just because like it's kind of the same as if, you know, like say you saw a pro basketball player playing, and, you know, you're like, oh, you know, like his basketball skills are really good, and then you might be able to learn some foundational things like, oh, you know, I like how he dribbles the ball, or I like how, you know, his shot looks like that. But there are certain things that guy just cannot teach you, like, you know, how to recognize the opponent's defense, or how to recognize the opponent's offense, or knowing when to take a jump shot and when not to take a jump shot, right? So there are things like that all come down to your judgment as a trader, and that kind of just develops as you trade over time. And that's why you'll hear it time and time again that time in the market is everything. Take your time. 1,000 concentrated full effort hours is going to be worth a lot more than 10,000 just randomly looking at the chart, not knowing what the fuck you're doing, just, you know, no plan, nothing. Okay, so make sure when you're looking at a chart and you're trading, you're actually doing something. Like you're not just dicking around like what I'm doing right now. Like I'm looking at a chart, but I'm not doing shit. So this I wouldn't even consider as looking at a chart. Okay, when I say looking at a chart, I mean like, all right, let's do a daily scan. All right, cool. So it looks like there's potential for a double top here where, you know, the daily, we swept a little deviation right here with the high daily close. So there's a good chance that maybe we go down here, right, where we had double taps. So this might, you know, wick down here. And then if there's like a little stop hunt area, you want to just also buy in, because you know that this is typically where big money enters, right? The wicks tend to be where the profitable enter. So boom, right? Something like that. Cool. Like you're looking at charts. The other thing that I was doing, not looking at charts. Okay, so just want to clarify that. Those are some quick tips on scalping and just trading as a whole. Next question is from Star Snoopy. He asks, do you consider the alt group's momentum when you enter a trade? For example, DeFi coins are not well right now, so maybe you don't look at DeFi and focus on more momentum environments like NFT. Oracles are also down, for example, so do you try to anticipate buy or selling of alts by typology? Your English is fine, by the way. That makes perfect sense to me. So what he's saying is, because I'm focusing on DeFi, because I'm focusing on NFTs, majors, whatever, right? Is there more weight to each group depending on how they are performing? And the answer is always yes. Yes. Like, you want subgroups like that because you want to be able to look at the market and be like, okay, this is bullish, this is not, this is underperforming that, and then whichever one is your, you know, your top performer, and it has to be statistics. Okay, like you can't just be like, I feel like it's the top performer, because what you feel means nothing in a trading. Okay, like how you feel about something means jack shit. I don't care if you feel like Matic is the best coin in the world. Doesn't no, the market doesn't give a fuck. All right, is Matic the top performer? If it is the next top coin. Like it is the shit, you know, like, because that's what the market says, and money goes a long way when it comes to trading. So again, yes, always emphasize the over performers. Okay, so the strength, you focus on that. Like fuck weakness. Okay, don't stop buying weakness. We're in a bull market. Okay, you focus on the strength, and when the weak ones become stronger, you buy into it, right? Because you saw what I did with Link. Okay, let me top over to Link, right? So Link, we knew that it was kind of weak already, right? When it broke all-time highs and kind of just dicked around for God knows how long, like a month, right? And then it instantly retraced the entire breakout, right? You kind of had a hunch it was fucking weak. Like we sat here in the Discord going like, yo, this is fucking weak. And guess what? We banked on weakness to turn into strength. Did it happen? Yeah, momentarily. But even the strength itself was pretty weak, right? Instantly sold into, if not for more, right? So it went actually below this consolidation area. So yeah. I have, so 420 Mr. Pink says there's a 25% cap on the screen share. I have 50 in right now, and I guess that's the cap. We'll figure something out for next time, I promise. So okay, next question is from MFN Chase. I've been seeing a lot of Litecoin talk on crypto Twitter. Could you take a look from a bear chart and narrate what you see? I'm assuming he's talking about Litecoin USDT. So let's see. Oh, what in the fuck? How do I have a chart of this? Okay. All right, cool. So I have already marked out a chart. Very nice. So it looks like we're at resistance right now. Deviation above the highs right here, which makes sense. Same idea what we're talking about with the stop runs, right? Where you push up above resistance, people break out buy and they get punished big time for it, right? And then price wicks just below the order blocks. See? And see how this wicks below the prior stop hunt? So a lot of people who entered here probably put their stop losses like right here, and then got forced to buy back a lot higher if they want to get back in. But yeah, so now we're at resistance again. So looks like high, lower high. So Litecoin looks good, but I mean, until we cleanly get above 240, I don't see any swing opportunities. You can play the lower time frames, but by the time CT calls something that's a major, it tends to already have played out, because that's just kind of how the nature of it is. When it's a small cap, you need less money to push it. So when you see it on CT, you can still kind of be like, yo, we can still get in and the price can still go up. In a major, when you start seeing people spam it on crypto Twitter, tends to be close to or near the top. And I mean like spamming it on crypto Twitter. I'm not talking about your one gem account on crypto Twitter saying, yo, Litecoin is gonna pump, because they probably won't make a difference. But when it's like 5 or 6 big accounts going like, hey, Litecoin is gonna pump, good chance they're already in. They're a big account. You just basically assume that, hey, they probably got their friends in, whatever, and there's like the money's already in and it's not pumping. I doubt the couple thousand that the average person invests into Litecoin is gonna push price any more than $1. Okay, so yeah, that's kind of my take on this chart. Also, we're gonna close this Q&A around 6:30. Okay, so I'm trying to keep it short because there might be issues uploading the video. That's what I'm assuming. It would not let me upload the last one, so we'll figure something out on how to upload that. I might just have to upload it as a raw file into Discord. But so Gazwary asks, can you talk about picking where to draw lines versus boxes on a chart, like body versus a wick, what you're looking for, picking one over the other, and how far into the past would be considered too long to be informative? Good question. I think this is a really helpful question for everybody. I'm gonna go ahead and let's pick a new chart. Let's pick a let's see, I don't know, let's pick our best friend Ripple. Let's do Ripple. Okay, let's do Ripple. So let me drink some water real quick. All right. So when I'm looking at majors, right? When I'm looking at majors, I always like to, use the wicks, and the reason for that is that liquidity makes it harder for them to manipulate, charts in that sense, where wicks are viable. Where I know that if these wicks get ran here, I'll just mark out wicks that are very obvious, like very obvious wicks. Okay. Like just boom, boom. Okay, and I guess the top right here, right? Yeah, a long wick right there. Okay, so this is not how I would chart a chart, but I just want to make a like a point right here. Okay, so you're seeing a lot of wicks. Now, what's one thing that you really notice here? You'll notice that every time price travels through one of these wicks, it reverses, or it closes above that the wick that you see, only to go up, right? So wick down right here, so wick up, wick down, trades below, pumps back up, right? And then we'll set this wick as the high. Once it sets the high, it goes down below, price trades below this wick, right? So price trades below this wick, instantly, right? You see that? Trades all the way up here and then closes back down below. You see how these hunts work? And obviously right here, this is just setting the stage, right? You see this high right here. I mean, I guess you can do the same thing if you really want. So you see how it made the low, made the high, or wicked the high, went back below, raised up here, trades above, and what does it do? Once it trades above, goes back down below. So now this is where we're at right now. Any breach of these two wicks, you probably want to buy in the opposite direction, right? That's just kind of how or why I like to use wicks when it comes to majors and stuff like that, because it gives very accurate readings, right? Whereas if you're trading like a shitcoin on Uniswap or something, wicks are everywhere, and in that case you want to focus on the bodies because it gives you a better reading. So hopefully that answers your question. Same thing with support and resistances. I do order blocks, and that doesn't really change. Order blocks, I like to just focus on highs, right? And then these were the lows over here, right? This consolidation period. Over here you see a little gap right here, right? So things like this is what I probably do. Nothing too crazy, right? If on lower time frames, obviously, like if you go in the 4 hour, there's way more support and resistances available to you. But yeah, so that's a quick primer on that. Hopefully that makes sense to you. If that doesn't, feel free to ask me another question. But yeah, next question is from Tim Frazier. Buying coins with fundamentals in a bull market, would you hold a moon bag for any coin you do sell, even on futures, because it has potential for the 100x you were talking about? I never hold it on futures. When I do, I take the profits and I, whatever allocation I want to use with the profits, I'll put it on spot so I don't have to pay funding. But yeah, I always hold a moon bag. Just because, not because like I think it's like a tremendously great idea or anything, but it's just because I've been burned so many times by not having a moon bag that I just do it now because I don't want to feel that pain, and so yeah. Next question is from Grayzen. I know you said in your last stream that you always take profit at resistance, but how do you determine take profits in price discovery? Do you think Matic will touch back at all-time highs before moving higher? Do you think Matic will touch back at all-time highs before moving higher? Okay, so that question is a little confusing, but I will answer the first part first. So I always take profit at resistance, but how do I determine take profits in price discovery? In price discovery, like say for Matic, let's do Matic because like we were talking about Matic, so I'm gonna remove everything. For price discovery, I always go on to kind of like the 15-minute chart or so, right? So if you're in price discovery and you're looking to take profits, obviously if you go on like the 12-hour or some shit, like what is there to work with? There's literally nothing to work with, right? It's just, okay, I have 4 candles that are, being sold into more and more aggressively. And when I see this, I do want to sell, right? So when I look at this, I know, okay, I want to take profit. Where, right? So maybe you jump to the 30-minute, okay? And you're gonna always mark out the highs, always, okay? Notice how once it prints the highs, it also prints the lows. So you kind of have a range, right? And then from there, you can do your, oh shit, sorry. Okay, boom, okay. See, so I know people use Fibonacci and it's based in math. I like to just separate it into 4 quartiles because of the rules that I stated earlier, where I like using these numbers as kind of like a benchmark, right? Where it's like, all right, where's logical support and resistance around these key areas, right? So obviously resistance right here, sold into, and obviously support down here. Okay, these are just arbitrary boxes, by the way. Not, I just drew it there so you can kind of visualize what I'm talking about, more than it is an order block. And then you'll see 25 percentile. You're gonna see like this area, right? So not really exactly on the 25%, right? But yeah, and then 50% tap right here, sold into. This is a little iffy for me. I don't really think the 50% is too relevant, but whatever. So then I'm looking at this, right? I marked out the charts. I'm like, all right, I need to take profit. I would aim to take profit anywhere within these ranges, right? So like maybe just above the 50, right? So that's kind of how I go about taking profits in price discovery, because you're not working with too much. You're working with a small tight range normally, and then you take profit from here, and then you can buy it back right here. And then if it loses this area, you just pretty much want to exit a larger chunk of the position, right? Because I mean, you bought back with some profit right here, you'll probably lose like 1, 2, 3% of it at most, and then you can rebuy down here, right? So that's kind of how I handle my take profits. This looks like it wants to melt down, so Matic, maybe take some profit. But yeah, do I think it's gonna go back up to all-time highs before dipping or touch back at all? I think you're talking about the prior all-time highs, or like that's what I'm assuming, because if it touched the all-time highs, it's gonna go high. Like it has to touch the all-time highs before moving higher. So I'm assuming that you mean like, is it gonna dip? I think it will. I honestly think it will, right? I do think this area looks like it's a fucking magnet, like 34 cents or so. You might see like the 35-cent area. So I do think this is gonna get hit. When it hits this area, I probably will want to buy, but I would have buys stacked down to like right here for the same reasons we were talking about earlier with liquidity, right? Where people buy right here, they might set their stops right here. I get to benefit off their stops hitting down here. These are what people call lucky entries, right? If you go in Salsa Tequila's thing, he calls it lucky entries, or yeah, lucky entries, likely exits, right? So one more time, lucky entries, likely exits, which means if you get filled here, you're pretty lucky, right? As in you benefited off somebody's stop loss or liquidation, right? You got lucky. Price doesn't really move down here unless people are getting shafted for it, right? And then likely exits are just where is price likely to go that you want to exit, right? Maybe all-time highs, you take some profit off, right? Like maybe it sweeps all-time highs, does a little double top like Bitcoin, whatever, things like that. Likely exits, right? Take some profit there. And yeah, Koala says, do you use hard stops when scalping? I do not. I do not. I never scalp with size that gets me liquidated. So that's also one thing. Next question is from Minty is Trading. He asks, how do you manage risk when scalping? So when I'm scalping, I like to just kind of like, sorry, I said we're gonna do the perps. Okay, so for the perps, oh my god, I just doozled all over this. Okay, so when you manage risk while scalping, before the trade even takes place, you should kind of know, all right, for example, my account is $1,000, right? Say you have $1,000 in your trading account. You should, if you're just starting to scalp, which I assume you are, you want to have like a fixed percentage, right? And then you want to enter positions based off that percentage. So if you're like, all right, I can only lose 2% on this scalp, that determines the size that you can enter on that scalp, given whatever invalidation points you have. And I think Krillin has a great guide on how to, I guess, factor out your risk and your sizing and all of that. So definitely look into that, because I think that's going to be really useful. And okay, all right, I'm gonna take one, maybe two more questions, because I need to close this out before like the recording gets all fucked up. But when aiming for lucky entries, how do you manage your trades if you don't get fully filled? Do you wait for levels on low time frames to get reclaimed in order to add? Great question. Yes. The name of the game is always patience, right? So when you get lucky entries, you pretty much, you know that you're safe, at least until, you know, price, you know, makes a high or whatever, and then it goes down back below, whatever. But if you got a lucky entry, there's a good chance that, you know, you're pretty safe. So as price starts to move through levels, it should emphasis on should, give you ways to enter, right? So let's pull up the BitMEX chart because I erased it, right? Okay, so let's say you got a lucky entry right here. Like you knew these were the lows, whatever, okay, and you had bids just below the lows because, you know, you're super smart and you knew like, all right, look, if we're gonna hunt lows, it's gonna be like around here. So then boom, you get an entry, right? Maybe you only get like one BTC order in, whatever, and you want like a 5 BTC. Well, guess what? Oops, sorry. Boom, you get a clean retrace of the breakout, right? So like boom, flip into support, boom, that's one ad, right? And then say you have the order block right here, right? Sorry, that's a really ugly order block, but I'm using this candle. Okay, so boom, you might get a little retest there, right? Or you get a retest up here, whatever. Like, there's multiple retests. You have to go on lower time frames. Obviously, I'm on the 12-hour, but yeah, you see, you get a little retest here, and then suddenly you have a decent sized position, and then say you take profit at prior all-time highs or something, right? Because this is a likely area that we were talking about to exit, right? All-time highs, likely area where you want to take some profit at least, and then you cover yourself, and suddenly, even if price dumped down here, you're still in the green because you already took profit maybe on this, right? And these entries are still heavily in the green. So that's how I would kind of build a position on the way up, right? Ideally, you just build your position on the way down and you're just fucking balling, all right? But yeah. Next question comes from Gaz Wary. He asks, what advice would you give if you're out of sync with how price is moving? Entry hasn't been 100%. Is it a timing thing? Sell spot now and wait for price to bottom before buying again, or just sit on the shit entry until resistance? All right. When you're out of sync with the market, what you need to do is get more skin in the game. And what I mean by getting more skin in the game is not by avoiding trading or like betting more. It means taking more trades with less capital, as in like put $1 in, put $5 in, whatever. See what's comfortable, get a read for the market, right? That's kind of similar to what we were talking about in the prior scalping question, where I kind of gave you guys tips on what to do that will help any form of scalper, where it's like you want to warm up, you want to get a grasp for what the market is trying to give you, and the best way to do that is to have some capital on the line so you can kind of feel the emotions, albeit it's not uncomfy, but like which way the market wants to go or which way the market is telling you should be betting, right? So that's one thing. Entry is not always 100% timing thing. Sometimes it's just, like sometimes you never get your entry, man. Like some people are still waiting for 19.8k retest. It's not happening, Sell spot now and wait for price to bottom before buying again, or just sit on shit entry until resistance. That's more of a personal thing for you. With spot, I don't mind holding on to it. That's just me, because I know that, look, it's not something that is gonna be forever. I do think Bitcoin goes quite a bit higher, especially with all the institutions buying in. It just doesn't make sense that Tesla's the top, or this is the top of the run and we get a double top that's just literally sitting at the top right now. Like, it's literally sitting at the top. Like, when has Bitcoin ever sat at an all-time high or 4% away from the all-time highs and given you an opportunity to short the start of a bear market? Never. It has never done that. So my bet is number goes up long term, but yeah. All right, so last question comes from Star Snoopy. He asks, when you see a super bullish coin, for example ENJ or CHZ, that's engine and Chili's, what generates the top? Can you anticipate it by looking to order books, for example? Why does the trend line suddenly stop? Because whales have reached their take profits. All right, so this is a pretty loaded question, but I get what you're trying to say. I do think I get what you're trying to say. So, okay, so you're asking, all right, so price has gone up a lot. Holy shit, it has gone up. Oh, I even charted like a long time ago, and it was like 8 cents at some point. It's fucking crazy. What generates the top? Well, every other top is usually just as soon as sellers overwhelm buyers, that's going to be a top. And that's why when you see news events, you'll see that a lot of buyers just storm in. But when those buyers are done storming in, price tends to nuke back down, right? Does anyone really know a reason for why the top forms? Not really, there's no specific reason. That there's no like, because Loma said it's the top, or like there's just no real specific reason. But a couple things that you can do is you can draw like a trend line, right? So you'll see off trend lines. So what's really nice about trend lines is that they take into account time, okay? And when you take into account time, you're able to accurately account for momentum. And when you see momentum, like, you want to buy into it. So when you see, things slowly get more vertical, it's not even touching the trend line anymore. All right, maybe you want to buy it, because it's no longer going linear. Right, it's basically going exponential. It's basically going, and on a long enough or high enough time frame, that's pretty much what it did, right? Where it's like, it starts a little shallow, and then picks up steam, and damn near vertical, right? So, can you anticipate the top? Yeah, as soon as like the trend line starts fading, like you can look on the 12-hour or something like that, when the trend lines start falling, right? So like if, say, it loses this trend line like down to like 175 or something like that, bounces up right here, you probably want to sell the $2 because it broke momentum, right? Like, you're basically seeing that suddenly the prior market chemistry, where there were significantly more buyers than sellers, which is the only way that you get this kind of price action, right? And when I say more buyers than sellers, I don't mean like people, I mean money, okay? Because let's say me and you, we're both trading. Let's say you're trading with $100 million and I'm trading with $100, right? We're not the same. When, like, yeah, technically there is like one buyer and one seller. Say I'm selling, you're buying. Yeah, technically there's equal amount of buyers and sellers, but is it really equal? It's not, because you're trading with 100 million and I'm trading with $100, right? We're not equal. The market does not view us as equal. So when you're looking at this, just know that numerically speaking, there's a lot more buying going on than selling. Okay, and as soon as we lose the trend line, it basically just means, oh, hey, the market dynamics are changing a little bit, where sellers are starting to pick up or buyers are starting to run out. Like, there can only be so many people buying and there can only be so many people selling, and eventually sellers become buyers and buyers become sellers. So, which is why you want to really focus on time, right? Because time allows you to see velocity, momentum, and you just, break up this trend line, a retest if possible, and you'd want to just get out of that position, right? Because if it reclaims it, okay, cool, then we can ride it for like a fifth leg up or whatever. I don't even know how many legs this is. 1, 2, 3, 4, 5, 6 legs. But yeah, so hopefully that answers your question. There's no easy one trick way to figure out why the trend suddenly stops. It's more or less just a variety of things, but hopefully you understand the dynamics behind it, because all those other things are symptoms. The root cause is that there are more sellers than buyers. It's very I feel like it's a very cop-out answer, but when it comes down to it, that's kind of what it is. Everything else is basically just justifying that idea, right? Which is just, hey, news came out, cool, what does that mean? That means more people are gonna buy, more money goes into that coin, number goes up. And then if, let's say there's a bad news, suddenly people want to sell and the market dynamics change, the trend might stop, right? So yeah, no, absolutely. Yeah, whales are buyers, right? Like if you're a whale buying, you just have enough money to change the trend. Like, that's what Elon does. It's like anytime Elon tweets, you get people willing to buy in because they understand this there are people who understand market dynamics that aren't necessarily traders, right? They're more like investors or maybe long-term traders. They're not really, day-to-day traders like we are, or they're not even, like really trading. Maybe they have a separate person on the side doing their thing. But yeah, it's what happens when you have large capital. You're able to influence markets a little bit more, and then you really start to understand the economics of the market, right? If you have a big enough portfolio, you can try on like Uniswap, where the books are maybe, I don't know, $100,000 at most, right? And you can kind of push price around depending on how much you're trading, and you can dictate the trend. And a lot of people do that, because you'll see, you go on Twitter and you're like, oh yeah, dude, buy cat coin, and it's like, what the fuck is cat coin? But it doesn't matter. It doesn't matter if that coin sucks, as long as there's somebody or multiple people buying it to push the trend up, to make the chart look good, whatever. Because look, it doesn't matter, like it really doesn't matter. And that's why you'll hear shit like scams pump the hardest. Well, yeah, scams pump the hardest because nobody wants to trade them, so the books are very thin, which means if anyone wants to, they could easily push the price up, which generates FOMO, which generates, I guess people entering, like buying, right? Because people tend to view things as the more expensive it is, or the more it's gone up in value, the better it is. And that's not necessarily always true. So keep that in mind as well. Like, just because Matic is up 80% does not actually mean that it's any better than it was a month ago, right? It doesn't matter. Like Bitcoin dumping to 3.5k didn't mean that it was any worse than when it was trading at 7,000, right? Which is double the price that it went to. So just food for thought there. Price does not always reflect value, and knowing the price of something does not mean you know the value of it. So that's where fundamentals and technicals differ, and that's also where you see people get on Twitter and get very angry, right? People get very frustrated, like, how dare you talk about my project like that? Because why? Because they see the value in it, and we see the price of it. And as traders, usually the price outweighs the value aspect, especially in such like a early and speculative market. So many things can change. What's good today might not be good tomorrow, right? Example of that is like Walton Chain or I don't know, a bunch of other coins that were gonna change the industry, Verge, stuff like that, right? So things change quickly, and that's why I have a hard time sticking with fundamentals and values, because things change so quickly that unless those fundamentals I guess enact themselves quickly, they become obsolete, right? Like if Ethereum doesn't scale anytime soon, some other coin scales, I guarantee you Ethereum's gonna suffer because of it, right? It's one of those things where fundamentals, it's kind of like if you're in a shitty relationship, right? And you see the potential in this person, right? Oh my God, they're so great. They could be so awesome. But potential doesn't mean shit if you don't realize it, right? So it's kind of like that. And I know I just went off on a complete tangent, but that's just kind of how I wanted to end the Q&A. Hopefully that answers your question. But yeah, I'm gonna go ahead and close off this video stream.